one of the things I think we got feedback was just the concern of dilution. Like there was an announcement made last month about the private placement of 35 million, which left a lot of investors questioning if more dilution will take place down the road. I do want to highlight, as you said, you reduced debt by 473 million within the 9 months ending December 31st, 2023. And then, like you said, getting that debt down to $400 million. But if you're in front of a group of investors right now, there are concerns about dilution. What is your clear message to them based on some of the numbers that I've just outlined? Hey everyone, welcome to our latest TDR Cannabis Exclusive. A lot of you have reached out to us over the past week to find out when our second podcast will be with CEO David Klein to talk about some of the questions that you have pertaining to the company. Well, here we are, and let's welcome him in, the CEO of Canopy Growth, which trades on the NASDAQ under the ticker symbol CGC. David, good to see you. Hope you're having a good week.
Yeah, good to see you as well. Thanks for having me on.
Anthony Varell, good to see you. Got a lot of great feedback. And a lot of feedback, I should say, pertaining to our first podcast. But, I think we'll quickly recap. What's the sentiment been like in the last week from a lot of people that you've heard, just with regards to your latest earnings and some of the feedback that you've received?
Yeah, so, again, I think the things that are resonating with investors is that we have attractive gross margins now. Our top line's growing. It feels like we're doing all the right things and heading in the right direction. There's still, admittedly, a little bit of a wait and see attitude out there in terms of, how does this progress over time? But I think there's some good momentum.
Yeah. Well, I want to dive into this, and I know there's been a lot of feedback from our viewers asking questions. So we'll get into that, talking about financing and balance sheets. So as we dive deeper into the earnings point on this episode and start off with the cash position, it sits right now, the company currently has $142 million of cash and cash equivalents at the end of 2023, a total net loss of $216 million last quarter. So how should investors be interpreting the math here? And are you expecting to raise capital in the future again?
Yeah, so let me just walk through a little bit of the math here, right? So our actual loss from operations was about 60 million. And the difference between 216 and 60 was just the accounting write-down of our U.S. investments. And we all know fourth calendar quarter of last year was not good for the U.S. cannabis space, right? So we started 60. We then have that converts to about $9 million of adjusted EBITDA loss, which everybody talks about in the cannabis space, and about $34 million worth of cash usage in the quarter, right? So that's what we're working against as we look to put the company on the right path. Now, from a debt perspective, we finished the quarter right around $600 million worth of debt. Canadian. These are all Canadian numbers, by the way. We previously said we were going to pay back, we were going to equitize about 100 million in a deal with Constellation, which will happen at the same time they go into exchangeable shares. We have pay downs planned in the fourth quarter that are already underway, our fourth quarter, which ends in March, which should leave us just over $400 million worth of Canadian dollar debt at the end of the fiscal year.
So when you're looking at the burn,
by the way, we paid down $1 billion of debt this year.
Sorry, say that again.
So when you're looking at the burn, the true number is 34 million as far as the cash burn goes, and the plan is to reduce the debt by at least a factor of 20% here in 2024.
Correct. And then that the debt that remains has a maturity in 2026. And like when you break that down, guys, there's a certain amount of debt that we believe the business can sustain, right? There's also now that we're generating positive and attractive gross margins, now we can lean into the growth, and so there's a certain amount of that debt that we can kind of amortize through generating our own cash flow with growth over time. We'll continue to look at the balance sheet to see if there are other assets that we can mine that ultimately can help us pay that debt down. And then, as a last resort, we'll go to the market if we need to.
Okay. Well, one of the things I think we got feedback was just the concern of dilution. Like there was an announcement made last month about the private placement of 35 million, which left a lot of investors questioning if more dilution will take place down the road. I do want to highlight, as you said, you reduced debt by 473 million within the 9 months ending December 31st, 2023. And then, like you said, getting that debt down to $400 million. But if you're in front of a group of investors right now, their concerns about dilution. What is your clear message to them based on some of the numbers that I've just outlined?
Yeah, look, when we think about dilution, if we're going to use our equity for anything, we want to use our equity for accretive transactions. So that's like job one. As we've highlighted here, we've paid down a ton of debt up to this point, and we're going to continue to look at driving growth in the business as a way to generate cash. As I said, mining our assets, and then as a last resort, we'll use equity as we need to, but we'll do that as efficiently as possible.
Good to know. Anthony, far away.
Yeah, and then one of the other things that I did notice was that the going concern is still attached. I mean, this was something that was brought up by several investors. I understand it was addressed on the earnings call as well. I mean, can you just dive into that label and the implications of it, and when you expect that to potentially roll off and not be seen in the earnings report?
Our plan is to be is to remain viable forever, and that comes from a strong profitable base business, meaning Canada, our international business, Stores and Bickle, also the ownership of the Canopy USA structure, and to grow in each of those markets. Now, as it relates to like the going concern, like I think everybody understands that. What that is, if you're using cash in your business operations and you don't have cash on your balance sheet to cover the foreseeable future at your current usage rate, you put a going concern notification so that you're warning investors to just be careful. We have a plan to work our way through that. As I said, it revolves around the things we've already talked about. But we'll be. I think the going concern note, just as a disclosure kind of point, will remain with us for a while. We're doing everything to get rid of it, but more importantly than eliminating the going concern statement in our documents, we're trying to do the things in the business that actually just make it go away.
Right.
Yes.
Another thing I want to bring up was revenue. Another important topic is involving 9 analysts who, after the latest earnings from last week, have a consensus of revenue coming in at $299 million in 2025, which would then reflect a 17% decline in revenue compared to the last year of performance. So, straight up, do you agree with that sentiment? If not, can you explain why?
Yeah. So first of all, we sold a lot of businesses as part of cleaning up our debt. We sold businesses. The businesses that we sold were drags on our cash flow and on our P&L, but they did impact our top line. When I think about our businesses, we know that this last quarter, we grew 9% in adult use in Canada, 11% in medical. We're pretty confident that we'll show really good growth in Canada going forward, just on the back of those results. And by the way, we're happy to do so now that we have good margins. I keep repeating that, but it's hard to grow a business and feel good about growing a business when you're struggling to have decent margins. There's a lot of opportunity in our international business, so we expect to put on a bunch of growth in our international business over the next year or two. And our Stores and Bickle business has doubled in the last 4 years. So I think the top line story is going to be a really good story for Canopy over the foreseeable future.
So I think when we look at this, looking back at a lot of these questions, concerns that investors had over the week, if you're trying to comment and reiterating like what you just outlined, when it comes to dilution, when it comes to potentially raising money, you feel like this is just the beginning of a reflection on the latest earnings. Like, you can understand where people's concerns are, right? But at the same time, too, as we've alluded to, there's been a lot of change over the company for the last 6-9 months, correct?
Yeah, look, I've said this before. There was for a long period of time, Canopy and arguably the whole sector was really about hype. It was about tapping into something that was a bit amorphous. Like, nobody really understood the market. We understand the market now, and we have a business that, instead of being a hype business, that works. And so, as long as we keep focusing on that business that works and growing the top line, we think that the investors will like the story over time. But look, I understand where people are coming from with Canopy, but across the cannabis space, there was just a lot of hype, and now it really is who can deliver, and we feel like we're well positioned to deliver for people.
Yeah. Let's move now to the U.S. And I know you had a bunch of questions you wanted to ask Anthony.
Yeah, I mean, from my understanding, the definitive proxy with the SEC was filed this week. I mean, as it relates to CUSA, are you currently in a quiet period, or are you able to kind of walk us through the structure of that? That was a lot of the questions that we had actually received
So
after the earnings call and
we're
after the
technically,
announcement.
so we have a shareholder vote scheduled for April 12th. So we're technically in a solicitation period.
Okay.
Look, the point of the solicitation period is to be able to talk to investors about kind of what it is we're ultimately asking them to approve. So yeah, we can talk a little bit about the structure. The only thing is, like, our investors and maybe a lot of folks in on social media and the media have gotten really enamored with how the structure works. What I can tell you is Canopy USA has a basket of businesses that are really good businesses, and I think underappreciated in general. And so the real value to me of Canopy USA is getting those businesses working together, building themselves out in the US market. And, look, the fact that we filed our definitive proxy with, SEC sign off on that definitive proxy, tells me that the structure works. The focus really needs to be on, these are great businesses, and what can we do to create value for our shareholder with those?
So
Absolutely.
with the structure you're saying, it does work. I think some of the concerns is, will you be able to maintain your NASDAQ listing? I don't know if you can comment on that right now, but that is a growing concern right now. What's your feedback based off of that?
Yeah, look, the changes to the structure were so that we could maintain our NASDAQ listing. And so we made those changes. We then needed to get the SEC completely comfortable with those. We've done so. And so, yeah, we think that the Canopy USA entity is attractive, and Canopy will remain dual listed. And we think that creates just a powerful machine in the cannabis space right now.
So one thing you did mention at the beginning was Constellation converting to exchangeable shares at a certain point in time. I mean, when Constellation came into Canopy and deployed that $5 billion, that was the shot heard around the cannabis industry. That was an inflection point where everybody started to really look at this thing seriously, with enterprise level players from outside of the cannabis space ultimately wanting to come in. Do you see a point in time or any time in Canopy's future where Constellation could come in, especially with your past at Constellation, coming in and internalizing the asset into their mothership and just amalgamating everything into their business?
I actually want to come back to kind of where you started there.
Okay.
The macro trend that Constellation saw, and their thesis behind their investment was sound. And we're actually seeing the proof points coming through now. Like, cannabis is the biggest consumer trend, most exciting consumer trend, I think, in our lifetime. We're seeing reports out where people ages 21 to 35 years old, like 70% of that populace prefers cannabis to alcohol. Constellation was right for thinking they needed to invest in cannabis because it is a macro trend. And, the great thing about investing in a macro trend is you don't have to be super right. You have to get the trend right. But you can make money on the back of the trend. So Constellation was right. They were early, right? And so
I was just going to ask that.
So, they timed it wrong. They recognize it. They've come to grips with it. There are 3 members of Constellation that still sit on our board and are super engaged, involved in all the decisions the company makes. That will change when we go into exchangeable shares, but they have a massive interest in Canopy being successful. Look, who knows where this all ends up, but we all know that there's going to be a day that comes when big alcohol, big tobacco, big pharma, big CPG come to cannabis. And you know what? Constellation has a head start, and that's probably good for them and probably good for us.
Well, I'm glad that you outlined that, because you're right. The concept, the idea of getting involved was right. The timing wasn't. It was early because, as we know, as you just said earlier, it was a lot about hype. But I'd be curious, we look at this U.S. market, if CUSA turns out the way we hope it does, or the way that you hope it does, once the proxy basically is all submitted with the SEC and you get feedback based off of that, and we look at this as a $50 billion market, is Constellation invested in this long term? Meaning, are they in it long term wise to one day see federal legalization announced? Are they committed to making sure that Canopy Growth succeeds long term, that one day they're in it long enough to see the U.S. deschedule and announce federal legalization pertaining to it?
Yeah, again, I want to be careful about what I say about our biggest shareholder, but look, they've chosen to convert their equity into exchangeable shares, which in the near term won't be tradable. So they're not going anywhere with this investment. And I think they're just going to watch us and cheer us on. And well, who knows what happens in the future? But, they deserve a courage premium because they stepped in early. And, my hope is they stay engaged over time because they should be one of the winners here ultimately because of the risk they took.
Fair enough.
Absolutely. So we've talked a lot about the past, and I mean, I kind of want to set the stage for the future with what we're planning to talk about in the next couple of videos that we shoot. Most importantly, the actual CUSA portfolio companies being Jetty, Wana, Acreage, also Storz and Bickel, which is a big part of the cannabis or the Canopy story as well. I mean, when you look at Canopy as a whole, I was reading the other day, someone was calling it a potential call option on some of the most attractive cannabis markets in the world. When investors say that, how do you interpret that, and how do you kind of see that as forming into Canopy's overall strategy for the future?
It's actually the thing that excites me most because they're right. We do have access to markets like Canada, which there's a lot of negative kind of connotations around the Canadian cannabis market. Look, it's a good market. It's going to grow high single digits. We are profitable in that market. It's just not what everyone thought on day one, but it's going to turn out to be a nice market. We can talk about Germany. We can talk about Australia. We can talk about some other things we're doing internationally. We can talk about Storz and Bickel. But the real gem is in the U.S. And so, we have access to all of those businesses. But then we also have something else, which is we've had to survive Canada. And just to build a frame for you, and if you look at a market like New Jersey, where price to consumers like $7,000 a pound, which is like $15 a gram, right? Yeah. $15 US a gram. And then you look at our business in Canada, where I'm saying we're profitable. We're selling Kush mints, which we can't make enough of. That's under our Tweed brand, right? We're selling that for $5 Canadian a gram. So call it $4 versus $15. Now this is price to consumer, not wholesale pricing, but in that value chain, we're able to be profitable in Canada. I'm excited about the opportunity to have at these other markets with what we've learned in growing good product in Canada, in optimizing our production footprint, like bring all of that learning to these macro trend markets. Yeah. It's a call option with a lot of experience behind it. So it's just not a dumb, coin flip call option. It's a call option with a ton of experience behind it.
That's actually a great point, because the fact that you have been able to right size the Canadian business and make it to the point of profitability, and the margins and the price to the consumer that you're leveraging in the U.S. is gargantuan compared to what it is in Canada right now. I think that's very well said, and that's part of the story that really I don't think a lot of people are thinking about right now, is the key learnings from surviving Canada to how that can be translated into the U.S. assets.
Yeah. Well, I think a lot of it has to do with people just want to understand, obviously, what this CUSA structure will look like. Just to remind people, I guess, a lot of our listeners, CUSA is not going to be a public entity. This is going to be a subsidiary of, obviously, Canopy Growth. So if you are a CGC shareholder, this is one of the elements that will be invested within the actual overall company, just to clarify that, correct?
Correct. So we won't be consolidating the results into our results. But because we have a significant interest in it, we will be publishing every single quarter supplemental disclosures so the whole world can see what our CUSA entities are doing. And so if you're an investor, you have to think about an investment in Canopy stock is really an investment in our Canadian business and, the power behind our Tweed brand. It's an investment in Storz and Bickel. It's an investment in Germany. It's an investment in Australia and others. It's also an investment in Wana. It's an investment in Jetty. It's an investment in Acreage and the powerful markets Acreage plays in, like New Jersey, New York, Ohio, Pennsylvania, Illinois, right? So it's kind of a one-stop shop to invest in. The numbers won't consolidate into ours. You as an investor will be able to see what that CUSA investment did and what the Canopy investment did, and where you can kind of do the math to see how the business is trending at that point in time. But I think it's a powerful set of assets that our investors can invest in.
Yeah. Well, it's something that we've all been waiting for quite some time. It's all about the U.S. market. But to your point, yes, it has been hype in Canada. And I think a lot of the questions that people want to know is that look, there's a lot of money that obviously Constellation wrote. A lot of that was spent, but at the same time, too, a lot of these assets, based on this last 6 to 9 months, have gotten rid of some of these cash burning assets. And then most importantly, now it's like, what do we look at, as far as financing, the amount of debt that was paid off, but more importantly, will there be dilution later on down the road? And I think that is a real concern that obviously investors have. But I think the most important thing here today is just to have this conversation with you, provide a little bit more dialogue. And by all means, we may not have all the answers right now in this podcast, but I think this is the whole point of having these ongoing conversations as the year progresses, right?
Yeah, look, I think that, as I said before, we now have a business that works. We have a plan to work our way through the capital structure. And I know people are concerned about that. We have a path through there. We have strong businesses throughout. And now, and it took way longer than any of us expected, we now have this CUSA entity coming to play, which in and of itself is a massive asset. And, even when you think about our CUSA business, the one thing I just want to say there is that we have our ownership stake in there also includes an ownership stake in TerraSyn, right? So we own 17% of TerraSyn. Like, you start adding all these things up, our ownership stake in TerraSyn is, 150 to $200 million Canadian. You start adding all this up and you say, man, there's a ton of upside here. I understand we have to prove this to our investors, and that's what we're working on every single day.
Yeah. Well, I know you're not looking at the share price over the past week or so, because that's all retail. And we're trying to educate people on what this industry looks like in 3 to 5 years from now versus 3 to 5 days. But I do appreciate you taking the time to make yourself available for these questions. And to all of our viewers, if there's any more questions or feedback that you want us to ask, feel free to leave some comments below. We'll get back to David and we'll set up another podcast pertaining to that. But listen, appreciate you taking the time and providing some clarity. And most importantly, let's keep in touch and keep these conversations going.
Yeah, thanks a lot, guys.
Thanks, David.
Thank you,
Appreciate
David.
your time.
Bye.
What is up, everyone? What'd you think of the video? Leave a comment below. And as usual, if you want to subscribe to our channel, then click on the link here. If you want to see more videos like this, then click on the link here. As usual, click on that bell right below us to get all the notifications, because at the end of the day, TDR sets the narrative, because we would not be here without you. Thanks for watching, everyone.